Hello viewers, welcome to my channel. I am Hasham. So this is the last video on the topic of journal and ledger. So last three problems I am going to explain you in this video. The three problems which I am going to do are the problems of recording the transaction according to modern method. See here, in the earlier videos, first video I have explained you there are two methods of recording the transaction. The first method is the traditional method, old method, where we follow double entry system where every transaction will have two effects. One effect it will debited to one account and the other effect it will be credited to another account. That's why in double entry accounting system, one account is debited and another account is credited. For every debit there is a corresponding credit. So normally we record the transaction by passing the journal entries in the journal, debiting one account, crediting another account. This is the old method. But nowadays a new method has been started in America. It is called American method, modern method, where the impact of the transaction will be seen on the assets, liabilities and capital. That is accounting equation. We know accounting equation says assets is equal to liabilities plus capital. Total assets is equal to total liabilities plus capital. This is called accounting equation. So modern method says every transaction, what is the impact of the transaction on assets, liabilities and capital. We have to explain logically. See here, there are two impacts of every transaction. Every transaction we have two impacts. Something we give, something we get. By giving something, we'll get something. So two aspects are there. So every transaction we have to see what is the impact of this transaction on the assets, liabilities and capital. So the impact may be both on the assets only, or the impact may be one on the asset, the other on the liability, or the impact may affect assets as well as capital. So we have to see what is the impact of that transaction on assets, liabilities and capital. That is called accounting equation method of recording the transaction, right? So in these three problems, I'm going to explain you about the recording of transaction according to modern method, according to accounting equation method. So I'm going to start the problem, but before starting the problem, I expect my readers to have a printout of the problems, which I have given in the link under my description. So take a printout, keep it ready. I'm starting the 16th problem. Prove that the accounting equation is satisfied in the following transaction. Prove that the accounting equation is satisfied in the following transactions. A 1, 2, 3, 4, 5. 5 transactions are given and show the balance sheet. It is also asking you to show the balance sheet also. The first transaction. So how I am showing the effect of this transaction on assets, liabilities and capital. The accounting equation is assets is equal to liabilities plus capital. Now serial number, transaction, assets, liabilities, capital. This is the format I have prepared. Now first transaction. In the problem it is given commenced business with cash. Commenced business with cash. What is the impact of this transaction? Cash is coming in. When cash comes in, our assets will increase. So asset side, 50,000 rupees assets increased because received the cash. But this cash has been given by whom? The cash has been invested by the owner. When the owner invests the money, it is called capital. So capital account, capital column 50,000. No effect on liability. Only the thing is business has received the cash 50,000 and this cash has been paid by the owner. It is called capital. That's all. So accounting equation, assets is equal to liabilities plus capital. We don't have liability, zero liability. So assets is equal to capital. Now second transaction, rent paid in advance. Paid the rent in advance. When we pay the rent, cash is going out, so our asset will decrease. Our assets will decrease. The advance rent paid is 5,000 rupees given in the problem. So 5,000 rupees advance rent paid. So concentrate on this point. What is the effect of advance rent paid? When rent is paid, cash is going out. When cash is going out, our assets are decreasing. Our assets are decreasing. So minus 5,000. Our assets decrease. So minus 5,000. Apart from that, advance rent paid is an asset. Prepaid rent is an asset. prepaid rent is an asset. So one asset will increase. So by conducting this transaction, one asset increases, the other asset decreases. The asset which increases is prepaid rent. And the asset which decreases is cash goes out. Cash is being paid 5,000. So there is no impact on liability. There is no impact on the capital. The effect of this transaction is one asset will increase, the other asset will decrease. So minus 5,000 plus 5,000. So what is the net effect? 50,000 minus 5,000 plus 5,000, again 50,000. No effect on liability. Capital is 50,000. Accounting equation, new accounting equation satisfied. Next one, purchased goods for cash 15,000 and credit 10,000. Remember, we have conducted two purchases. Cash purchases 15,000 and credit purchases 10,000. So total purchases are 25,000. So 25,000 rupees of goods we have purchased. So our asset will increase by 25,000 because we have purchased the goods. The goods comes in. So 25,000 rupees our asset will increase. So plus 25,000 asset increase. Now what is the cash purchases? How much are the cash purchases? 15,000. That means cash is going out. Cash is going out 15,000. So minus 5,000 asset. Minus 15,000 asset. So we receive the goods 25,000, add 25,000, minus 15,000. And 10,000 rupees credit purchases. The credit purchase is a liability. We have purchased the goods from a supplier, but we have not paid the amount. We will pay the amount afterwards. So presently it becomes a liability. Creditor. The supplier is the creditor. We have to pay it afterwards. How much are the creditors? 10,000. So 10,000 is a liability. So here 10,000. So what is the impact of this transaction? Our assets increased by 25,000 because we have purchased the stock. Our assets decreased by 15,000 because we have paid the cash. 15,000. Then there is a liability because we have purchased the goods on credit. We have purchased the goods on credit. So creditors occurred. So that 10,000 rupees creditors. Now take the total 50,000, 10,000, 50,000 plus 25,000 minus 15,000, you will get 60,000. Now confirm it. Assets is equal to liabilities plus capital. What is the liability? 10,000. What is the capital? 50,000. 10,000 plus 50,000, 60,000. New equation. That's it. Next one, paid salary 300 and outstanding salary 200. Paid salary 300. That means 300 rupees cash is going out. Cash is going out 300 minus 300. And outstanding salary 200. Outstanding salary due. It is liability. So our liability increased by 200. Liability 200 increase. Now rent. Rent is an expenditure, whether it is paid or not. We have paid the rent of 300 and the rent outstanding is 200. So total rent is 500. The total rent for the period is 500. And expenses will decrease the profit. Expenses will decrease the profit. When profit decreases, the capital decreases. When profit decreases, the capital decreases. So whenever expenses are incurred, you deduct from capital. Expenses are incurred, you deduct the capital. Here in this case, the expenses are 500. 300 rupees salary paid, 200 rupees salary outstanding, total 500 rupees salary. So 500 rupees we should deduct from capital. So minus 500. 500 capital deducted. So what is the impact here? Cash reduced by 300. Outstanding salary is a liability, 200 plus 200 and minus 500 capital reduced. Now we'll check whether our accounting equation is satisfied or not. 60,000 minus 300, 59,700. 10,000 plus 200, 10,200. 50,000 minus 500, 49,500. Now accounting equation, assets is equal to liabilities plus capital. 10,200 plus 49,500. Add up these two, you must get 59,700. You are getting. So accounting equation satisfied. Last one is sold goods for cash 18,000, costing rupees 12,000. The cost of the goods is 12,000, but we sold it for rupees 18,000. That means 18,000 minus 12,000, 6,000 rupees profit on sale. 6,000 rupees profit on sale. Now first impact, When we sell the goods for cash 18,000, we are getting cash 18,000. Our assets will increase by 18,000 because we have received the cash 18,000. So plus 18,000, cash increased, right? But the goods of 12,000 rupees are going out. Goods are going out. The goods are the stock asset. The goods are the stock asset. Asset is going out. How much goods are going out? 12,000. So 18,000 rupees cash we are receiving, 12,000 goods are going away. So minus 12,000, right? How much is the profit? 18,000 minus 12,000, 6,000 rupees profit. And profit will increase the capital. So in capital account plus 6,000. Now we'll see the impact. 49,500 plus 6,000, 55,500. 10,200 as it is. 59,700 plus 18,000 minus 12,000, 65,700. Now check whether our calculations are correct or not. Assets is equal to liabilities plus capital. 10,200 plus 55,500, 65,700 tallied. That's all. This is called recording the transactions according to accounting equation method. Right? Now it is also asking you to show the balance sheet. Now balance sheet. Liabilities, assets. Now we are having three liabilities. The first liability is outstanding salary. How much is the outstanding salary here? 200 rupees outstanding salary. So outstanding salary 200. Creditor. We have purchased the goods on credit. How much purchased goods on credit? 10,000. 10,000 rupees are the creditors. We have purchased the goods on credit. We have not paid the amount. So creditors 10,000. And capital. At the end, how much is the capital now? 55,500 is the capital. Now the total on the liability side 65,700. Now come to asset side. On assets, first of all, stock of goods. Stock of goods. We have purchased the goods for 25,000. Purchased goods for cash 15,000, credit 10,000. Total 25,000 worth of goods we have purchased. And out of these, how much goods are sold? What is the cost of the goods sold? Here, 12,000. Sold goods for cash 18,000, costing 12,000. So 12,000 rupees worth of stock we have sold. So how much goods we have purchased? 25,000 rupees goods we have purchased. Out of 25,000, how much the stock of goods we have sold? 12,000. So 25,000 minus 12,000. You will get 13,000 rupees is the stock of goods still remaining. Prepaid rent. In the second transaction itself, prepaid rent paid in advance is 5,000. 5,000 rupees is the prepaid rent paid in advance, that is an asset. So prepaid rent 5,000. Now cash balance. How much is the cash balance? We have to see. From beginning, first 50,000 rupees cash has been invested by the owner, 50,000. Then we have paid the cash 5,000. We have paid the cash, rent paid in advance 5,000. So from 50,000 deduct 5,000. Here I have shown cash 50,000 minus 5,000. This minus 5,000. Then purchased goods for cash 15,000 minus 15,000. Cash is paid. Cash is paid 15,000. So 50,000 minus 5,000 minus 15,000. 50,000 minus 5,000 minus 15,000. Then salary paid salary 300. Then next we have paid the salary 300 rupees. So minus 300. Last one, sold goods for cash 18,000. 18,000 rupees cash has been received on sale. 18,000 cash has been received on sale plus 18,000. So again I repeat, 50,000 rupees initially cash brought by the owner, minus 5,000 rent paid in advance, then minus 15,000 goods purchased for cash, minus 300 rupees salary paid, plus 18,000 rupees cash received on sale of goods. So 50,000 minus 5,000 minus 15,000 minus 300 plus 18,000. 47,500 is the cash in hand. Now take the total of these three, 65,700. That's it. This is the balance sheet. Now next problem, 17th problem. See the 17th one. Show accounting equation just like the previous problem from the following. So 1, 2, 3, 4, 5, 6 up to 8. 8 items are given and we have to record the transactions according to accounting equation method. No balance sheet is asked. No need to make the balance sheet. Now, accounting equation, assets is equal to liabilities plus capital. First one, commenced business with cash. Just now the same. When the owner started the business, cash comes in. So bank asset column 1,75,000, capital column 1,75,000. Our assets increased by 1,75,000 and capital will increase by 1,75,000. That's the first. Second one, purchased goods from Sanjay. Purchased goods, the goods are coming in, assets will increase. So assets column plus 50,000. Our stock has increased, goods have increased by 50,000. At the same time, there is a liability because the goods are purchased on credit, not for cash. The goods are purchased on credit. So creditors, how much are the creditors? 50,000. Now add up 1,75,000 plus 50,000, 225 are the assets. 50,000 is the liability and capital is 1,75,000. Add up 50,000 plus 1,75,000, you'll get 2,25,000, new equation. Two transactions completed. Third transaction, sold goods on credit to Abhijit. Cost rupees 17,500, sales rupees 20,000. Sold the goods to Abhijit. Abhijit is the customer. We have sold the goods for 20,000. 20,000 and the cost of that goods is 17,500. First of all, the cost is 17,500 and sold for 20,000. So how much profit? 20,000 minus 17,500 is 2,500 profit. And profit will increase the capital. Profit will increase the capital. So here capital plus 2,500. One effect. Next effect, we have sold the goods on credit. That means we have not received the cash. We have sold the goods to Abhijit. In future, Abhijit will pay the amount. So Abhijit is the debtor. Abhijit is the debtor. So debtor will increase the asset. Debtor will increase the asset. How much is the amount due from Abhijit? 20,000. So plus 20,000. We have to get the 20,000 rupees from Abhijit. And what is the cost of goods gone away from the business? 17,500. 17,500 worth of goods we have sold. That means goods have gone. So minus 17,500. The goods have gone by 17,500 and we have to receive from Abhijit 20,000. So 20,000 assets will increase and 17,500 assets will decrease. So 2,25,000 plus 20,000 minus 17,500, 2,27,500. Here 50,000, here 1,75,000 plus 2,500, 1,77,500. Now check our equation is satisfied or not. 50,000 plus 177,500, you will get 2,27,500. New equation. That's it. Next one, purchased furniture for cash. Purchased furniture for cash. Furniture is coming in, cash is going out. That means furniture is asset, cash is also asset. One asset increases, the other asset decreases. So furniture, how much furniture? 10,000. 10,000 rupees plus 10,000 rupees minus. Because furniture is coming in, so 10,000 rupees increased. Cash is going out, minus 10,000. So total will remain same, 2,27,500, 50,000 one cent. New equation. Now paid cash for Sanjay in full settlement. Paid cash to Sanjay. Actually we have purchased goods from Sanjay. See here. Purchased goods from Sanjay 50,000. 50,000 rupees goods we have purchased from Sanjay. Now we have to pay Sanjay 50,000. We are not paying 50,000. Paid to Sanjay only 48,500. So instead of making payment of 50,000, we are making the payment only 48,500. That means Sanjay is allowing us a discount of 1,500. 50,000 minus 48,500, 1,500 discount we are getting from Sanjay. So this discount is discount received. Discount received is an income. And income will increase the capital. Income will increase the capital. So 1,500 capital increased. Right? Sanjay. Actually, how much amount we have to pay to Sanjay? 50,000. We are closing his account. We are closing his account. So minus 50,000. 50,000 rupees we have to pay. Minus 50,000. Sanjay account is closed. How much cash we have paid? How much cash is going out? 48,500. So cash column 48,500 minus. Assets will decrease by 48. So assets will decrease by 48,500 and our liabilities will decrease by 50,000. We are paying off the liability. There is no liability now. And 1,500 is the gain, profit. It will increase the capital. So total 2,27,500 minus 48,500, 1,79,000. 50,000 minus 50,000 nil. No liability. No liability at all. Capital 177,500 plus 1,500, 1,79,000. That's all. New equation. Equation talent. There is no liability. Then cash received from Abhijit. Actually 20,000 rupees we have sold goods to Abhijit. So we have to get 20,000 rupees from Abhijit. Now we have received 20,000. That means when we receive 20,000, our cash will increase, asset will increase. But when debtor was there, debtor will decrease. Abhijit was the debtor. So when debtor decreased, cash increased. And cash and debtor both are assets. Cash and debtor both are assets. So its impact is on asset side only. One asset increase, the other asset decrease. Cash will increase, debtors will decrease. So here plus 20,000 minus 20,000, same 1,79,000. New equation. Paid rent. When we pay the rent, our cash will decrease. So asset will decrease. So asset side, paid rent minus 1,000. 1,000 rupees asset we have decreased. At the same time, rent is an expense. Rent paid is an expense. And expenses will decrease the capital. Expenses will decrease the capital. Now capital side minus 1,000. So 1,79,000 minus 1,000, 1,78,000 tallied. Now last, cash withdrawn for personal use. When cash is withdrawn for personal use, it is called drawings. When cash is withdrawn, assets will decrease. So asset side minus 3,000. So when the cash is withdrawn, it is called drawings. Drawings will be deducted from capital. Drawings will be deducted from capital. From capital, deduct minus 3,000. So 1,78,000 minus 3,000, 1,75,000. 178 minus 3,000, 1,75,000 new equation. That's all. So this is the end of problem number 17.